Okay, good morning friends. Welcome to the channel. So today I'll cover ASML and TSMC because these are the two companies that just reported their earnings over the past 1 week. Before I start, I just want to share memes that I saw on X. I actually like these memes a lot. It's describing basically people who is having low IQ, high IQ, and those average people. So I mean, this memes is talking about content creation in general. I think I want to position myself as either the low or high IQ, meaning that I'm just talking to myself. I'm not really here to build an audience because I tried it for a few years already. The subscriber counts isn't that impressive, but I'm just here talking to myself. And anyway, I'm sharing stuff that I'm looking at anyway, right? So just sharing with you all. So let's kickstart ASML first. So the first one, total revenue is up 23%. Not that impressive, but still considered decent. And then if we look at the diluted net income, I think that it went up by 45%. This is a lot more impressive. Of course, this is because of the operating leverage, right? So nothing fancy here, just some impressive result. Not so impressive, I'll call it decent result. Okay. Gross profit margin is at 53%. Net income margin is at 30%. I think this is also nothing really surprising here. But I think last week we talked about companies with moat, right? And I mentioned that companies with moat usually they are able to maintain their gross margin and their net margin. I think this is another good example here. You see the gross margin is fairly flat over the years, and net income margin is also quite decent. Hovering around, let's say, between 25 to 30. Sometimes there's some fluctuation, but still relatively flat when you just zoom out and looking at the lines. Then if you look at free cash flow was not impressive. It was about 300 millions. So I was thinking, hey, why is it so low this quarter? And then if you just look at the December quarters, right, it was quite high at 9 billions, right? Why it dropped so much to 300 millions? And then if you look at the details, right, first thing for free cash flow, you want to understand two things. One is cash flow from operating, and then second thing is how much they spend on the capex. Because for these companies, right, say for example TSMC, right, when they invest heavily into their capex, right, building fabs, right, so if the capex is too high, so it hits their free cash flow, right? But I look at ASML, surprisingly, it is not because of their capex that is haywire this quarter. It's because even if you look at the cash flow from operation, right, it is quite low this quarter. And if you just go back 2 quarters ago, right, they have 9.5 billions of cash flow from operations. So you see the numbers go up and down before we talk about capex, right? So what it means is that even the cash flow from operating itself, right, is quite volatile. And this one I think is something to do with, let's say, if they deliver EUV machines, because these machines is very expensive, right? So and the timing of deliveries is not smooth over quarters one. So sometimes if they deliver more, they receive cash flow more. So all these changes in asset and liabilities also it will be affected. Because remember, for cash flow from operating, we are talking about cash flow, not accrual, right? So if they receive more cash here, it will show up as more cash in cash flow from operations. So that's why I would say that for SML, sometimes if you just look at cash flow from operating activities, right, it is not a good reflections of the results from their business. Therefore, if you just look at free cash flow, also it's not a good indicative. So this number here, I would say that maybe don't look at it into too seriously. Okay, maybe zoom out is fine, but just looking at 1 quarters, right, sometimes it is really influenced by all these changes in the deliveries of their products. Okay, just a quick one in terms of their PE, because after they release their results, I think people talk about like the guidance isn't that fantastic. But when I read the transcript, right, I think it's not like bad. It's more like just maybe it's not as good as what people expected. That's why the share price also dipped a little bit. But when I try to get a sense of the mood in terms of the management hints, right, I don't think the result is bad at all. I would say that the result is just normal, expected, decent. What I can't know is that the analyst expectation before we went into the earnings, right? Because sometimes the expectation was too high. So when the management guidance failed to impress the analysts, then there will be some re-rating, right? But nothing really surprising there. After the share price drop, I think if we just look at the forward PE, right now we are at 27.5x. I mean, these kind of numbers, if I just look at 27, it's hard for me to comment whether it's high or low. But if you just plot a chart compared to their historical level, right, I would say that it is close to average. Also, nothing much to mention here. In terms of their earnings, I would say that things are progress as expected. For example, they are talking about shipping high NA EUV. I think those are in the progress. Now slowly moving into volume productions. So I think things are progressing well. It's just that I think analysts likes to ask them, like in terms of the capex, right, their customers capex, meaning building up fabs, right? SML management didn't commit much because they say that quite a number of their customers is still concerned with the tariff situations, and they haven't really committed heavily in terms of their capex in the future. That's why they don't commit too much. So nothing much to share there. So let's move on to, or before we move on, let's talk about the shares outstanding now. Because I think if you look at free cash flow, nothing much to show, right? But at least for shares outstanding, if you just zoom out enough, right, you can see that the shares outstanding continue to shrink, meaning that this company is still earning free cash flow over time, and then they are paying dividends and they are using their money to buy back their shares. That's why all these shares outstanding keep on shrink over time now. So I think that's all about ASML now. Let's move on to TSMC. I think there's more to talk about on TSMC. So in terms of their revenue, you can see that their revenue is up 39% year over year. I think this chart, I posted this whenever I saw they updated their monthly revenues. So if you just look at the numbers alone, right, it's quite a mess because it's all numbers. By the way, you can download this in Excel so you can play with the formatting yourself, right? But if you just zoom out and look at every month, right, let's say they just released the June figures. This is 263 billion Taiwan dollars. If you just zoom out and look at their 1 year before, that was 207 or 208 billion dollars NTD, right? And then you just look at the chart over compared to the prior years, you can see that in terms of their revenue, it's really like, exponentially going up, right? So I think in terms of their revenues number is really quite impressive. What I want to say here is that the scale of the business, right, if you just compare to 1 year ago, 2 years ago, is still like scale up a lot. I think this one really thanks to the expansion or capex that they deploy, let's say like 3 or 5 years ago, right? So whatever the capex deployment for this year, it is really for the revenues over the next few years, right? So there's some lag between the capex versus the revenue, but now we are seeing the results of those so-called 100 billions capex that they deployed in the past now. So overall, I would say that good results here. And this table here is showing the year-over-year growth rate. As you can see here, for this year, right, I think the growth rate is really quite impressive. So from the beginning of the year, you can see that it's 36%, 43%, 46%, 48%. But over the June, it slowed down a little bit, but still over quite a decent growth rate now. So last year was a good year also. You can see that mostly it's green, right? But bear in mind that in 2023, when the result isn't that good, right, I think there's some slowdown in semicon, right? You can see that their growth rate can actually slow down to -1. So just to remind you all that when we see these kind of things, yes, sometimes the result looks good, but semicon is still a cyclical industry. So cyclical means that there will be some year they are growing like 27, 40% kind of level, but there will be some year they will drop in terms of their growth rate one. You can see it's like oscillating between green and red now. So just a reminder to you all. If you look at their management reports, right, I'll say just few things to mention here now. So for example, I think the 3 nanometers already ramped up. In the most recent quarter, is already 24% of their wafer revenue, and 5 nanometers, that's the one that is still the key one. So if you just sum up the 3, 5, 7 nanometers, right now 74% of their total wafer revenue belongs to this category. I think this is quite important because the 3, 5, 7 nanometer, this is the advanced nodes, right? And the advanced node is the nodes that are making money. Okay, the margin is very decent. For those mature nodes, right, it is really more like a commodity rather than the higher margin business. The margin is lower, but they try to do some sort of like specialized products for those mature nodes. But anyway, those mature nodes is like, in terms of percentage, is like only 1/4, right? I think they don't really affect the result too much. If you look at their margin is so high, look at their revenue growth is so high, all this is really thanks to the advanced nodes, meaning the 3, 5 or 7 nanometers combined. So I think this is one thing I want to mention. Second thing, if you look at the net revenue by platforms, right, you can see that now high performance computing is 60% of the total revenues, and smartphones is only 27%. So you see HPC is even higher compared to 1 year ago, which is only at 52%, right? So what I want to say here is that if you look at their segments, right, last time it used to be smartphones to be the largest contributor to their revenue, and now it's all about AI. So that's why during the earnings call, customer likes to ask them about their AI. Do you see some sort of slowdown in AI business? Because the highest profit margin and the highest growth is all AI now. If AI slow down, right, then you will see that Nvidia slow down, TSMC also heavily affected. They are all riding on this trend. But I think up until the Q2 earnings, right, when analysts ask them about AI, right, the answer is always consistent, right? It's like, okay, we still see there's no slowdown in AI. But all these slowdown, sometimes no slowdown up to Q2 doesn't mean no slowdown up until end of the year. Doesn't mean next year will be a growth year, right? So all this, because it's quite cyclical, very hard to predict. That's why, all these analysts, they are very jittery one. They keep asking to reaffirm. The moment they smell some slowdown in AI, right, then they will keep rate down all these companies already. That's why I would say that even for TSMC, right, I mean, a bit personal about my own investment, right, I checked my record, right, I haven't been buying TSMC for quite some time already. The reason is because the result looks good now doesn't mean that the result will continue to look good over the next 2, 3, 4 quarters or even 2, 8, 10 quarters, right? So, and it can get ugly when things turn south, right? That's why I'm a bit cautious here in terms of my own investment. But when it comes to the results, when the results is good, we just need to, recognize the good results and then just, clap for the management and congrats all the fellow shareholders here. I guess you watching this also, probably you are also shareholders, right? So congrats to you as well, all this good result. Okay, let's go back to the financial diluted net income. This is what I meant by, more result that is impressive, not just like, decent, right? Diluted net income is up 61%, definitely good result here. And then if you look at the free cash flow, although they have been still, investing heavily every quarters, building up fabs in Germany, in Japan, in US, right? After those investments, they still delivered this kind of free cash flow, right? It's really impressive results. So if you look at their profit margin, right now is at 58.6%, and then net income margin is at 42%. Look at there's some fluctuation in this chart, right? But remember, you look at the y-axis there, the axis started from 36%. So imagine that, let's say if I set the axis to 0%, right, you will notice that this gross profit margin and net income margin, right, they are quite flat one. What it means is that TSMC is a company that is they're having pricing power. They are not selling commodities here. I'm referring to the advanced nodes. Yeah? That's why that's able to maintain their profitability. Their results all looks good, right? It's because of this pricing power. And then if you look at their PE right now is about, let's call it like forward PE 20. Forward PE 20 definitely doesn't look cheap at this moment. You have to remember the forward PE 20 is on a high forward earnings. Right? So that's why you look at the share price also at all-time high, right? The valuation, I would say that it's not cheap, but it's not like bubbles. It's more like kind of I sense some premium being priced into the share price right now. That's why you see, right? It is not too long ago when, as a community, I mentioned that I have bought TSMC at, let's call it, I think $63. That was my last purchase. So it is up quite a fair bit since my last purchase. That was 2022, by the way. So you see, back then, right, the PE was about, let's call it like 11 or 12, right? Right now, almost doubled already in terms of their PE. And then in terms of their financial results, also, you look at all this free cash flow or diluted net income, also, I'll call it like, let's double since low in 2022, right? So when the valuations close to double and then the financials also double, that's how we get like, 300% since end of 2022. So that's the share price performance. Actually, up 300% means it's already 4x, right? So you take 60 times 4, 240. So that's the share price performance since just 3 years ago. And then the other thing that I wanted to mention is that this is the chart of the Taiwan NTD versus USD. The reason why I wanted to mention about this is because recently US dollar has been depreciating, right? And it really depreciated against NTD quite a fair bit. So if you look at the chart here, just over 1 quarter, right, end of March until end of June, right, USD actually depreciated by 12%. And why this is important to TSMC is because for TSMC, right, their revenues is, let's call it like almost all of them is priced in US dollar. But when it comes to their expenses, right, because almost all of their expenses is in NTD. So when your revenue is in USD and your expenses is in NTD, when USD depreciated by 12%, right, then your margins straight away impacted, right? So let me just read out this comment from the management. Compared with our second quarter exchange rate guidance of $1 to TWD of 32.5 provided on April 17, the NT dollar has appreciated by an average of about 4.4% sequentially, which negatively impacted our second quarter revenue by about 4.4% in Taiwanese dollars and our gross margin by about 180 basis points. So almost 2% gone. Then for third quarter of 2025, based on the current exchange rate of $1 to TWD of 29, the average NT dollar will appreciate by another 6.6% sequentially, which will negatively impact our third quarter revenue by 6.6% in NT and reduce our gross margin by about 260 basis points. So you can see, right, as USD drop, you see their margins straight away cut down by a couple of percentage. So let's say, other companies, let's say if their margin is 20%, suddenly drop by, this kind of like 4.4% is really a lot. But good thing is that their gross margin is at quite a high percentage. That's why they are still fine with this. So then I just want to quickly mention, I think this is mentioned by the TSMC management. They repeated this a number of times already, but I think it's worth mentioning again. So they mentioned in terms of their profitability, right, it's basically 6 factors. Okay, the first one is their technology leadership, meaning that are their customers sticking with them. Say for example, let's say if their customer example, Apple, move to other companies, right, then they will have a problem, right? So it's a function of their technology leadership. This is we are talking about premium pricing, customer stickiness. And then second thing is pricing. Of course, when from time to time they will check up their price and then just ask their customer to pay a higher price. This is continuous. They call it like sell their value. So it's, if they are able to justify it by having a better products, right? So their customer is willing to pay a premium price. So pricing is second thing. Third thing is capacity utilization. This is talking about the demand, the end demand, and whether their fabs, right, is operating at high utilization. Because let's say if the orders come down, their fabs is utilization is like, let's say below close to 100%, right? So when all these expensive machinery sitting there doing nothing, right, but the expenses still continue because they still subject to depreciation, right? So that one definitely will hit their profit margins. So the utilization is very important. That's why every time when they spend capex, right, they want to make sure that all this capex is not like they won't end up in a situation where they bought the machines already, then the orders doesn't come. So they want to make sure that all this end demand is very healthy. Then only they spend on their capex. But they also cannot be too conservative. If they are too conservative, right, then they can't satisfy the orders from their customer. Then other competitors will step in as well. So this is they need to balance basically. Then the fourth one is cost reductions. So this one they do all sorts of things to try to manage their costs. And this is about operational efficiencies. Here we are talking about the yield as well, right? So all this is part of the cost management. Fifth one is technology mix. And technology mix, I think this one also is not like 100% under their control. It's just like they have their advanced manufacturing, which is high margin, and they also still keep their matured nodes, right? And all these different process nodes, they have different margin. And sometimes when this revenue mix between different process nodes change, right, it will affect their overall margin. So this is just something that they just, it's not really like managed. It's more like it is something that affect their margin. And the other thing also, as they ramp up their N4 or N3 in US, right, sometimes even same process nodes, but it is being manufactured and in different geography, their margin also could be somewhat different, right? So as they ramp up in specific geography, that could also affect their overall margin. And the sixth one is, of course, their FX rate. So this is mainly talking about USD versus NTD. So they mentioned in the earnings call as their FX rate is like working against them, right? So they just need to use the remaining 5 factors and try to manage that accordingly. So I think they are hinting that they are flex their pricing power and try to ask their customer to pay a bit more. So all this pricing is continuous one. They will check up their price, but they cannot do it in a way that make their customer run away. So they can do a bit over time. But of course, if their products is good and the customer rely on them, I think their customer is happy to pay more. So that's the business as usual for them. But of course, aside from pricing, there are still other factors that some of them is like under their control, some of them is not under their control. So it's just business as usual. All in all, it's just to tell you that these are the factors that is affecting their numbers. Okay, I think that's all about the presentations. I hope you all enjoy. Coming 2 weeks is still the earnings season, right? So you will see that quite a number of large caps, they are releasing their results. We are all busy reading all these numbers and then busy reading the financial transcript, see if there's anything that is impacting our companies. So I think the next one coming, which one I will read? Maybe it's Tesla, Alphabet, and then sometimes I will read Intel as well, because to me Intel is still a good case study because new CEO coming in, right? I'm not sure whether there will be some sort of pivot because it will impact the companies that are invested in, for example like TSMC and ASML. So sometimes it's good to read all this. It's just my part of like SMEcon coverage. The other companies, it's not under my coverage. Still busy with work. I'm not full-time investors, so I need to limit my time spent on covering all these companies. All right, thank you so much for joining in. Thank you so much. Bye-bye.